Welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and I teach my proprietary Safe Wheel options trade for free. And the system is currently, for the year, down 2.7%. Okay, please type in the chat that you can hear me. I do have a new audio system here, so I have no idea if you can hear or not. Hopefully you can. And if you can, please post any questions you might have. I don't want to get to the end of the broadcast and then not answer your question. You can hear me. Good. So it's, can you hear me really well, or is it low volume or normal? I don't know how far to keep this microphone, away from my mouth here. Okay, so you can hear me at least a little bit. You can hear well. Okay, good. All right. So normal. Good. Thanks, Charles. All right. Let's get into, where are we here? The earnings edge. What happened last week with the earnings edge? Well, you can see here that there's nothing new. And that's because the filters that I used, none of the stocks fit through the filter. And so since nothing fit through the filters, I didn't make a trade. So there was no trade for the earnings edge. So my record is 27, 15, and 4. Now with the new exit criteria, the record is 6 wins, 7 losses, and 1 break even. And in 2022, did about 63%. Now, so far this year, down 24%. So down really big. We took some losses all here in a row, especially that one on NVIDIA, big loss there. But since I've been doing the new exit criteria, my average loss is about $402 and my average win is $966. So the system's still doing well since the new criteria was established. It's just this year we hit a little bit of a cold streak. And I remember I did this last year too, but we'll see what happens. I mean, you just never know. But I do want to show you guys, hey, there's a lot of volatility in this thing. Okay, let's talk about the Premier Level 5. Also, there is a link in the description if you're interested in the Earnings Edge program. And it's an alert program. Okay, let's go to... So we are in the Premier Level 5. This is a great system. I mean, drawdowns only about 4% all the way from April 8th, even to present. So almost a year. Largest drawdowns around 4%. This thing did 15% annualized in 2022. Vastly outperforming the S&P, which was down 20%. And in 2023, this system is up about 5.6%, with the S&P up about 5.9%. So you can see that it holds pace most of the time when the market goes up. But when the market goes sideways or down, this thing vastly outperforms the S&P. Like I said, also very low drawdowns. Now, the current record for the Premier Level 5 is 17 wins, 2 losses, and 5 break-evens. And currently, we have 1 open trade with the system. So there's also a link in the description for the Premier Level 5 alerts. Now, as far as I'm starting to do masterminds now. You probably are aware of it. What I'm going to do for my next current mastermind's got one more. It's almost full. I only have room for one more student. And then, so the next mastermind that I'm going to do is I'm actually going to go over the Premier Level 5 system. Rather than it being an alert, I'm actually going to teach everything you need to know to trade it on your own. That's going to be my next mastermind, which will be coming up probably in the middle of the year, or it could be in October. I haven't decided yet. But I will be teaching the full system for the Premier Level 5 in my mastermind group. Okay, so let's get into, let me make sure I have my notes here. The Safe Wheel. What's going on with the Safe Wheel? So I am still in Uber. I like Uber, even though Uber hasn't been good to me. Let's see how Uber's been doing. Down $160 year to date. And I think I was down some last year on Uber. Now so right now I only have my put hedge. So look at how many days I have left, 102. So technically, um, because I'm close to 100 days or under 100 days, or I'm going to be under 100 days next week. So I'm not going to do anything this week, but next week I'm definitely going to have to move this hedge. And whenever you move this hedge for any reason, it's time to kind of reevaluate which stock you're using. And I keep saying I'm going to go away from Uber, but I think I'm going to stay with Uber because one of the things I talked about last week, and someone brought up the fact that Uber didn't meet the criteria. Let's see here. As far as how much implied volatility, because we want it to be between 60 and 100, but that's just a guideline. And I know that if you get your implied volatility between 60 and 100, what that means is that you'll have enough premium that's out of the money that'll bring in over 1%. So for example, this stock is trading at $35. So if I wanted to do a put out of the money, I wanted to get at least 35 cents, and I can get more than that. So that means it still qualifies, even though it's not, IV at 60. Let's see here. So even with the IV not being at 60, it still qualifies. That's the reason for the IV 60 is to make sure that you get enough premium. So this does have enough premium. Okay, so what do I look at? I look at my hedge, make sure it's proper, and it is barely. Next week, like I said, it's going to be under 100 days, so I'm going to move it. So the next question is it within range? Is it within 70% of the price? So 34.92 times 0.7 is 24.5. So it is within the price, within that 70%. So it fits the criteria to keep it. So what would I do next? Now that I know my hedge is good, I'm going to go ahead and start the traditional wheel, and I'm going to do it in the nearest term or the nearest expiration. Okay, so trade tab. Where did my option chain go? There it is. Okay. So I'm going to do it in the nearest expiration. So meaning, these are my expiration cycles. I'm going to sell here at the one that expires this week. And then of course my pricing here, or how much money I have to trade with, will determine my size. So as far as my sizing, I don't know if I talked about the wheel. I didn't talk about what I did last year with the wheel. Let me go over that real quick. So in 2022, the safe wheel did 21.7% with a largest drawdown was 4.8%. So that outperformed the S&P being down minus 20%. And currently we're at down 2.7%, like I mentioned before, with the S&P at 5.9. So we are underperforming this year, but last year we vastly outperformed. So again, where am I? I know my put hedge is good. So I'm going to go ahead and trade as if I'm just doing the traditional wheel at this point, because my hedge is in place. So I'm at around $35. I want to sell something out of the money, and I want to get something greater than $35. So I can actually go to the 34. And that's what I'm going to do. I'm going to sell one. So with the count being between $5,000 and $10,000, I'm going to use one option here and 3 put hedges. And I want to get as much as I can for this because I'm selling it. So, and of course, I'm going to trade the account live. And that's what I've been doing. I've been trading this account live. Now, I've made pretty much every trade live except for when I come in on Fridays. Okay, filled there. Now I've got to protect this put hedge now. So what I'm going to do is I'm going to buy a call just in case this thing just shoots up for some reason up to maybe from 35 to like 45 or something crazy like that. I want to be protected. I always like to be hedged. So I'm going to buy something around $5. I won't pay 7, but I'll pay 6. So this is the 38 call. See if I can get it for $5. I'm just going to get one. Again, dealing with one. Okay, got that at $5. So now I'm in. So I collected about $33 for the week. And my put hedge, of course, is getting close to giving me heavy depreciation, but I'll change that out next week. Okay. So, and also if you're interested in taking or getting this system where every scenario is gone through, then I recommend my flow chart and my 6 filters, and you can get that for like $89, and it'll go over every scenario. And one of the things that I'm thinking about changing on this. One thing that I wish I didn't do when I was with Uber early, when Uber went down to around 24, and I was at the point where it wasn't collecting enough premium. I had my second tier in, and I wasn't collecting enough premium. I could have got maybe $20, but I was trying to get like 30. I think next time I'm going to sell that $20 because we're in that kind of sweet spot, or I should call it the sour spot, where I can't collect any premium, but if the stock continues to go down, my put hedge is going to pay me out more than my losses. Or if it goes back up, my 200 shares that I'm holding is going to pay me out more than my losses. So I'm kind of in that sour spot, and I'm thinking I might hang out there longer rather than just exiting out of the trade. So we'll see when that happens again, because this system really makes its profit or makes its money when I'm holding 200 shares and I only sell one covered call and I have a free 100 shares and the stock goes up, and I have that full 100 shares just collecting. So I missed that opportunity because of the rules, but I think I might change the rules based on that. But you guys can talk about, we can go over that if you guys have any questions in the chat or any comments about that. Okay, so let's get into the questions here. Eddie, when the safe wheel, after being assigned 100 shares, do you sell the call above the former put strike or above the put strike, the premium from the last put? Okay, so basically, whatever I was assigned at, let's just say that I get assigned here. Which one did I just sell? Let's say I get assigned at $34 next week. My goal is to sell a call at something higher than $34. I could sell at $34, but I won't sell below $34. I hope that answers your question. Okay, I am the one who knocks. Do you take row into account, especially considering rising interest rates? So that's an interesting question. I do not when it comes to the options. Let's talk about that for a second here. Okay, so you notice that in my Premier Level 5, I own bonds. You see that? So I'm collecting another, 4% approximately. And that's really how I take row or interest rates into account. I don't take them into account when I'm trading the system itself or anything like that. But I do pay attention to interest rates because I can capitalize on selling or buying these bonds. Now, you're probably thinking, well, how can you buy bonds and then trade options at the same time? Because when you buy these bonds, they only take up about a 95 or 5% of your buying power. So in essence, you can kind of buy them almost, I'm not going to say for free, but you can see my cash sweeps. See, my cash, there's two separate things going on here. There's cash, and then there's buying power for options. So my cash is being used up for the bonds, collecting that 4%, but my buying power hasn't been affected, so I can still trade the options. So I'm collecting. So that's how I take row. I mean, that's not really taking row into account, but that's how I take interest rates into account. So I do pay attention to them, but I don't do anything differently with my options trades, except for buy bonds. WTD, would you consider taking profits and selling another put? So we're talking about the safe wheel again. Would you consider taking profits and selling another put or buying a call midweek if the underlying moves significantly, assuming you could still get the 1% premium? Yeah, I would consider that if I wanted to be active, if I wanted to really pay attention and be super active. One of my goals, always my goal, and I'm different than a lot of people. I want to figure out a system that does not take a lot of my time. And I'm willing to make the sacrifice of not doing these middle of the week trades, which could be beneficial, in order to give me more time. And so that's really the answer to that question. So the answer is really yes, you could do that, and you probably could be better off doing stuff like that and getting more active. My goal is to be less active. That's one of my goals. Okay, you guys hear me? Sounds better today. Great, thanks. Yeah, my son was telling me that the audio quality in my videos was kind of crappy, and I knew about that, and I told my kids what I wanted for my birthday in 2021 was one of these, I guess you can call it the Joe Rogan microphone, right? And they got it for me, and then I bought all the extra stuff. They just got the microphone itself, and it just sat in my hutch over there for about a year and a half. I decided to get it out the other day. So great. Will, you hear me? Great. Good. I'm glad that the audio is better. Okay. I am the one who knocks. So how much for the mastermind? I'll put a link in the description. Currently, right now, I'm teaching the synthetic dragon, but I don't think I'm going to do that again. And most of the people in the group paid $12,500 to learn that. But that was an early bird special. So if anyone wants to get in now, it's going to be $20,000. As far as the PL5, I have not, Premier Level 5, I haven't decided on the pricing for that one yet. But a lot of times what I'm doing is I will reimburse you if you don't make money. So let's say that these guys in the group let's say that the 6-month period is ended and they made $8,000 in their accounts. Well, then I'll reimburse them the difference between the 8,000 and the 12,500. So they almost can't lose unless their account actually goes negative. I'm not going to pay for that, but they'll get reimbursed the whole $12,500 if they don't make any money. So I, in essence, kind of guarantee it. And also you kind of learn it for free when you think about it, but you have to start with a $200,000 account. That's one of the catches. Okay. I'm the one who nods. How do you, if you're fully transparent, not a scam artist, if you're not showing us what you do on Friday? Well, I'm pretty clear about what I do on Friday. I also put out what I do on Friday is I either sell this call right here. Where am I? This call right here at 38. If Uber is above 38 at the last half an hour on Friday, I sell it. So it's pretty black and white rule. So, that's pretty much the way it works. It's black and white. You know what to do. I'm just not going to come on live and then sell this call real quick, but I will put it out on Twitter. Hey, this is what I did. I didn't sell anything, or I did sell it. So in essence, on Twitter, I'm telling you exactly what I'm doing, but it's very minor aspect to the trade. Just kidding. I just explained all that. Okay. Um, Ram, hi, can you please expand the column width of the instrument so we can see more details on options contracts? Are you talking about? Oh, I think I did that, right? Walter, where's M? Not on your sidebar. Why? Killed it on earnings last week. Okay. It's interesting that you brought this up. So you see how I have a different watch list here? And that's because I need to have real-time data. And that's because I need to use a different account. If I go back to the other account that I have, all right. Do you see how I have all my accounts in here? Normally, I also have another Thinkorswim where I pull it up and it only has these 3 accounts in it. But I have to put all these accounts in it because this particular account right here has the real-time data with it. These accounts don't have real-time data anymore by themselves. Okay, so let me explain that. Well, I just became licensed to be a financial advisor, and I registered with FINRA. And this Thinkorswim saw that I registered with FINRA, that I'm licensed, and they said, "Oh, you're going to have to pay for data $122 a month for your data." And I'm like, okay, so now I got to pay 120 bucks a month. So, and that data is linked to this particular account right here. And this particular account's linked to all these other accounts. And therefore I can get real data with these. But if I went onto only these accounts individually, I would not have real-time data. And I would have a different watch list. This is the watch list I look at every day. I might have to change it up, put some $20 guys in there, or $30 $30 stocks in there. I hope that makes sense. Okay. I like your thoughts on the rule change. Yeah, I appreciate that. I think, the opportunity is really there, and I'm like getting out of it when the opportunity is there. So it's worth the risk of not collecting premium a week or 2, maybe even 3 weeks, to get that big bump in P&L, which is really what makes the system work. Is kind of those off weeks where it's kind of where you get that big move up. Frequently changing the rules is not good. Yeah, for sure. Well, I ran that particular rule for a year and 3 months, and I haven't changed, as far as I remember, I haven't changed any of the rules since then. So it's a very yeah, definitely changing the rules is not a good thing. All right. Steve-O, is the contract ratio of the hedge and the protective call always 3-to-1? Yes. So if you upscale the 2 contracts on your wheel put, you would need 6 contracts to hedge. Correct. Yes, and 2 contracts on the protective. Yes. And so I could move this or scale this from a 1-3 to a 2-6 or a 3-9. And what determines that is how much money I'm trading within the account. So with this particular account, it's this one here. When this account gets to 10,000, so it's between 10,000 and 15,000, I'll scale this thing up to 2 and 6. And I will still continue to use stocks between $20 and $40. Will, the idea of his system still isn't changing. I think it's fine to tune the system to better do the idea he has behind the system. Yeah. I'm not like changing anything, a major change, just a minor tweak there. TechFacts Global. I sold a Tesla call at 200 with 90 days a couple weeks ago, and now I'm underwater. How do I protect this trade? Okay, so you sold a Tesla call at $200. Well, Tesla's at 195, so you're probably doing good. Let's see here. You should not be underwater at this point if you sold a call, and I would never sell anything naked. That's just my preference. I would always be hedged. So one thing I would recommend is just if you're interested in doing a wheel type strategy or selling premium, you could learn the safe wheel for free and go from there. That's what I would recommend. But you should be doing fine with the Silva 200. Me personally, I would get out of that thing and not do that again. Take your money and run and start doing something that's hedged. On Fridays, Carl has tweeted that he is doing on Fridays with the hedge call. Yes, I do. Sorry, Carl. Are you saying it would cost to add M to the watch list? No. I'm just saying that I had a different watch list before, and I would have to tweak this watch list like I just did. I just added M to it. The other watch lists, I only used those other 4 accounts. The other 3 accounts, these 3 right here. These had their own kind of, they would be there by themselves. They wouldn't have these accounts here. So when they're there by themselves, they have a different watch list and a different setup. Let me look at something here. Man, okay. Let's go, James. With the PL5 Mastermind, how much would that cost if you were only starting with $30,000 account? The expected return would be pretty small. Yeah, exactly. So that's why I have to kind of reconsider everything when I do my next mastermind. I don't know if I'm going to make, say only if you have $200,000 you can be in it, or if you have 30,000 you can be in it. But then there's going to be some guaranteed money coming to me, and a lot less money being reimbursed based on the profit. So I have to kind of figure that out. Walter, you passed the Series 65. Congrats. Thanks, Walter. Yeah, it was not an easy test. It was pretty hard. It was actually harder. The harder part was actually getting registered. I tried to get registered myself and for about a year, and I couldn't figure it out, so I finally had to pay somebody to do it. Okay, so here's another question. VFX traders for the safe wheel. Did the any money call cancel out the 100 shares of assigned put last week? So I didn't sell an in the money call. Oh, okay. You're talking about what happened last week. So last week, if I remember correctly, I was assigned at $34 and I sold the $34.50 call. So I made $50 on the assignment, plus I made whatever the premium I collected. Let's just say it was $50. So I made like $100 when I got called away from that stock. So that more than outpaced, or should have more than outpaced, the put hedge of the loss of the put hedge. So I think that answers your question. Will, can you recommend anywhere where we can learn how time affects a particular options price based on its DTE and IV? Well, I mean, it does give you the theta, so that's kind of how much it's going to lose per day. The IV factor, the IV is always kind of the wild card. You just don't know what IV is going to be. But whenever I get into questions like this, I mainly kind of I back test and I look at, different scenarios, and I look at how each scenario affected the P&L of a position. And I think that I answered your question. If not, let me know. How time affects particular options price based on the DTE. I mean, you can look at the theta and you can compare different DTEs. So let's say DTE of 20 days versus DTE of 40 days. You can see that the theta, what the theta is for the 20-day versus the 40-day. That'll give you an idea. But the IVs are going to be different too. So, but the theta itself should hold on its own. Theta is a good enough answer. Okay, good. Thanks. Tech, facts, global. How do you see SPX 0 DTE trades with martingale? Just off the top of my head, I haven't studied the 0 DTE enough, really. I know, it makes sense to me and I understand a lot of it, but I haven't done back tests on it. Therefore, I can't say that I know enough. But as far as martingaling, you could get in a situation where the market's just trending down or crashing down, and every single time you put on a trade, it just keeps losing and losing and losing and losing. I don't like martingaling almost in any scenario. Now, technically, I wouldn't call it a martingale, but I guess you could. That I do have a tier 1 and tier 2 with the safe wheel, but I'm hedged, so it's technically not a martingale because I have a hedge behind it, right? But it is almost kind of like a martingale when you double down like that. That's basically what the safe wheel does, is it doubles down. But it only does it once, and it has a hedge. So, but in terms of martingaling, I do not recommend it almost in any scenario because things can continue to go against you. Hey, Will, theta decay via Black-Scholes Merton formula. Okay. All right. So yeah, theta is a good one of the first order Greeks that you want to pay attention to. A lot of times, if you are trying to test out a system and you're putting it together and you're putting the trade structure together, and you notice that there's no theta, typically for me that would be a red flag. But there are exceptions when you have second order Greeks coming into play. Okay, let's see. I don't see any other questions. Make sure to follow me on Twitter at Carl Dom also, and hit the like and subscribe button. The like button really helps a lot. And also, I'm going to end the broadcast, but before I do that, I'm going to say, if the P&L is not real, what else are they trying to conceal? Okay, be back next week.